over IRS Form 8949, Sales and Other Dispositions of Capital Assets. This is a form that most individuals as well as corporations, partnerships, estates, and trusts may use anytime there is a sale of investment property, capital assets, and things of that nature. And this form, it consists of 2 pages with 2 parts. Part 1 is capturing short-term capital transactions. These involve capital assets that you held 1 year or less. This is generally known as short-term, either capital gains or capital losses. And then on the second page, you have part 2, which is long-term capital gains or capital losses. And this is defined by the IRS as capital assets that you held more than 1 year. So the general rule of thumb is 1 year plus 1 day is long-term. 1 year even is short-term. Before we get into the form itself, wanted to go over a couple of things in the instructions. We won't cover everything because even though this is a 2-page form, the instructions page itself is 12 pages long. So there are a lot of nuances that many taxpayers may need to look into the instructions for. So the purpose of the form is to report sales and exchanges of capital assets. And this form allows you and the IRS to reconcile amounts reported to you on 1099, either brokerage statements or substitute statements. If all forms 1099 or all your substitute statements that you received show the basis was properly reported to the IRS and that there is no correction or adjustment needed, you may not need Form 8949. There are a couple of exceptions that we'll get to in a moment when you will not need to use it. Generally, individuals will use this form to report the sale or exchange of a capital asset that is not already reported on another form or schedule. Gains from involuntary conversions of capital assets that were not used in your trade or business, non-business bad debts, the worthlessness of a security, the election to defer capital gain that was invested in a qualified opportunity fund, or the disposition of interest in a qualified opportunity fund. For filing a joint return, you can complete as many copies of this form as you would need to report all of your transactions as well as your spouse's transactions. However, you must include on your Schedule D the totals from all of your Forms 8949. For corporations and partnerships, they would use this form to report the following: the sale or exchange of a capital asset not otherwise reported on another form or schedule, the sale of stock of a specified 10% owned foreign corporation, but only if the sale would generate a loss otherwise, non-business bad debts, undistributed long-term capital gains from Form 2439, the worthlessness of a security, the election to defer capital gain invested in a qualified opportunity fund, or the disposition of interests in a qualified opportunity fund. Estates and trusts would use this form in a very similar manner as individuals. To determine whether you need to file this form and Schedule D, you should refer to the form instructions. There are also notes in the instructions to recap the definition of short-term or long-term capital gains, basis and recording if you're not familiar with how to record your basis, or if you need to reconstruct basis based on when you acquired the property and for how much. corporations' gains and losses for partnerships, estates, and trusts, how to report certain transactions under Section 1061, as well as digital assets. So for any of those topics, please refer directly to the form instructions. At the top of this form, you'll see the name and social security number or taxpayer identification number. Again, if you're filing a joint return, you may need to have separate 8949s, but your total 8949s should include all transactions for the year for yourself and for your spouse. You'll note that there are 3 boxes, A, B, and C. You have to check one of the boxes, but you should only check one box. You'll check box A if the short-term transactions reported on all of your forms 1099 were reported to the IRS. And there is a note above that says you may aggregate all short-term transactions reported on your 1099-B showing basis was reported to the IRS and for which no adjustments or codes are required. Enter those totals directly on Schedule D, line 1A. You are not required to report those transactions on this form. B would be short-term transactions reported on 1099-B that showed basis was not reported to the IRS. And then C, short-term transactions that were not reported to you at all. Again, check only one box. So in line 1, so you will use a separate part 1 for each type of short-term transaction. So if you do have transactions that fit category A, category B, and category C, then you must use a separate form 8949. And you can complete as many copies of part 1 as you need to report all transactions of each type. In part 2, you will do the same thing with boxes D, E, and F. Again, box D represents long-term transactions reported on forms 1099-B showing basis was reported to the IRS. Box E would be transactions showing that basis was not reported to the IRS. And then box F would indicate long-term transactions that were not reported to you at all on 1099-B. So for line 1, you will enter in column A a description of the property that you sold. If you held shares in, we'll call it XYZ Corporation, you can do that, or if there's a stock ticker symbol, XYZC, you can use that. As long as they properly describe the property and the description here matches or is similar to the description in your 1099-B. If you were to enter a digital asset, you would include the full name or the abbreviated symbol of the digital asset and the exact number of units sold. If you inherited the property from someone who died in 2010 and the executor of the estate elected to file Form 8939, then you would enter INH 2010 in here next to the ticker symbol, although you might want to do it like that. So, since this is a short-term transaction, we'll indicate the date acquired. If this was inherited property, then you're going to report the transaction on Part 2, because technically all capital assets that are inherited qualify for long-term capital gains treatment, regardless of how long you individually held them. So let's use a date. Since we're in the 2022 tax filing season, we'll use 10/31/22 was the date that we acquired this stock. I need to put, let's say that we disposed of the stock in November of 2022. You would simply write in the date that you sold or you disposed of the stock. In column D, if you did not receive a 1099-B or 1099-S, then you will enter the net proceeds for the sale. And the net proceeds equal the gross proceeds minus any selling expenses such as brokerage fees, commissions, things of that nature. If you did receive a 1099-B, then you would enter the proceeds shown. If there are selling expenses that were not reflected on your statement, then you will need to enter E in column F, which is one of the codes from the form instructions, and then you would make the adjustment here. So let's just imagine for a second that you sold these shares for $100 each. That would give the proceeds, total proceeds of $10,000, and we'll just assume that you're trading in an account that does not charge brokerage fees. We'll also assume that you bought these shares in October for $75 each, so the total cost would be $7,500. And again, the cost or other basis, you can include the cost of commissions into your basis. So if it was a $50 commission, then you could simply use $75.50 as your basis. If this was a gift, then your basis would be the basis of the donor. So if your father was still alive or your mother was still alive and gave you 100 shares of this stock, but they bought it a few years ago for $25 each, then your basis would be $25. Your proceeds would be $10,000. And because you did not inherit this, you received it as a gift, this could or could not be short-term capital gains treatment, depending on when you received the property and how long it was held by the person previous. But if you inherited it, then the basis would be whatever the stock price was on the day that you inherited it. You can see more, you can read more information in IRS Publication 551. So if there are adjustments that you need to make, you can refer to the form instructions for the different codes that you may need to apply, as well as any adjustments. And there's a specific section in your Form 8949 instructions, how to complete Form 8949 columns F and G. So for example, if you received a 1099 statement and the basis is incorrect, then you would use code B, and then you would manually make the adjustment. If you received a 1099-B and the type of gain or the loss is incorrect, then you would use code T, and so on and so forth. There are various different forms, codes for Form 8949 in the form instructions, as well as detailed guidance on how to use that. We'll assume that there are no adjustments that need to be made for this, and we'll simply go to the gain or loss column, where you subtract column E from column D, and the resulting amount is a $7,500 short-term capital gain. As you may be aware, short-term capital gains are taxed at ordinary income tax rates, whereas long-term capital gains are taxed at preferred capital gains rates. So we'll briefly go through column or line 2, which is where you add the total amounts, and you have $10,000, $7,500, and then your grand total. Oh, sorry, we made that backwards. Now we'll do the same thing over here. Let's imagine that that you inherited 100 shares of ABC stock, and you inherited it on, doesn't matter when you inherited it, but for simplicity's sake, let's just say you sold it on the same day that you sold XYZ Corporation stock. And on the day you sold it for $20,000, so $200 a share. You inherited it at basically $20,000. That's how much it was on the day that you inherited it back in January. It moved nowhere. There were no adjustments that you needed to make. So your gain on loss on this would be 0. For the line 2, you would bring this number down. You total it up, and then generally speaking, the capital gains treatment for long-term and short-term is that you would, in the short term, you would net all of your gains against your losses to come up with an aggregate number down here. And then you do the same thing here, where you aggregate all of the capital gains and losses. So if you had 50 shares of PDQ stock and you bought that in 2020, and you received $5,000, but you paid $15,000, then you would have a negative $10,000. You bring that all the way down, and you end up having a negative $10,000 or a capital loss of $10,000 that then nets against your $7,500 short-term capital gain, and that leaves you with a capital loss of $2,500 that you would then carry onto your Schedule D. So once you have all of your transactions on all of your forms 8949, and let's imagine that you ended up having to complete, you could complete 6 forms per person, or even more if you just had that many more transactions. But you could have one where you put all of your, box D in your box E, box F, and then you would have to do the same with A, B, and C. Once you aggregate all of those numbers, then you would end up carrying that combined total onto your Schedule D. So it's a fairly simple walkthrough, but depending on your particular tax situation, it can be very complicated. Most notably, the more complicated situations are ones where the transaction consists of a capital asset that may or may not be a very liquid asset, and it may be difficult to establish the basis. So for that matter, you might, if you have, either a significant number of sales, or if you have a significant transaction like the sale of a business or an interest in a business, then you may need to discuss with your accountant or your tax preparer, the construction of your basis. For example, I recently sold a business, and I had to discuss with my tax preparer, who came in and told me that I was going to owe an extra $45,000 to $50,000 of tax liability due to the capital gain. After we talked about the construction of the basis that I had in that asset, he came back, and the tax bill ended up being significantly smaller than that. Mainly because once we shared those ideas, he was able to go back with some of the documentation that I provided him to construct an accurate basis. So definitely proceed with caution as you're documenting your transactions. And for anything that's not a plain Jane vanilla brokerage statement transaction, I highly recommend you talk with your accountant or your tax professional to make sure that you're describing your transaction accurately. That's all we have for this. If you would like to read a little bit more detailed information about this, we've written a complete article, which you can find on our website, teachmepersonalfinance.com. Simply type in IRS Form 8949 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter through our website. If you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions, comments, or concerns, post them in the comments section or drop me an email. Thank you very much.